Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our publication. And joining me today from Sydney is Mr. Ross Benson, who's the chairman of 99 Loyalty, ASX 99L. Ross, good morning and thank you for that beautiful view of the Opera House in the background.
My pleasure, Stuart, and lovely to talk to you today.
Yes. Now, Ross, I was looking in the dictionary the other day and I looked under the word perseverance and there was a photograph of you there. You listed 99 Loyalty on the ASX back in 2013 as a great way for investors down here to get positioned in the massive growth of the digital economy in China. Here we are 8 years later, and the company's a heck of a lot bigger in size and really got its growth mojo going, it's fair to say.
Absolutely, Stuart. I mean, I suppose the words that come to mind were given by Lee Iacocca in a speech that he gave to all his staff at Chrysler, and particularly when we embarked on this journey in China back in 2007, and those words are never give in. But you know, what we believe is that the Australian market is obviously highly dependent from an economy, highly dependent on China, and we just saw that we would like to build that bridge by getting some of these exciting high growth tech stories to the Australian market and allow Australian investors to participate. I think against that, and the never give in attitude has been required because the sentiment predominantly towards Chinese either listings, and understandably because some of them have not displayed what I would call good corporate governance over the years. So understandably there's concern there, but in 99's case, we, you know, as you mentioned, we've been listed here since 2013. We have an extraordinary portfolio of blue chip clients in China. This is a segment when you get involved in insurance companies, the regulators are particularly aggressive in terms of making sure that you're complying with not only the local regulations, but your technology must be best practice. So we consider the fact that we have an existing pool of clients a very big tick, and the business in our view is poised now with a strong foundation of a run rate of about 50 million, poised for some significant growth over the coming years. Having said that, the alignment we have in China is B2B with financial services, and as a segment they have been slower to adopt some of the technology and the utilization of some of the data, the power of data that they have within their client base to really drive engagement with their customers. So we are really arming both banks and insurance companies with technology that enables them to not only engage and enhance the relationship with their customers to protect against the big B2C participants, but allows them to increase their customer base. And we just see that momentum increasing as the Chinese market continues its digitization of financial services. We've got very good structural headwinds behind us with the impetus that the Chinese government is now putting, and you'll see them effectively putting the clamps on some of the big B2C participants in the market, and they're really arming the banks and insurance companies with tools to fight back that loss of customers they've seen to the big B2C participants. So we see 99 as well positioned to benefit from that.
Certainly. And the most recent half, if you look at the presentation that you put out on the ASX recently, the growth profile has been fairly steady from year to year. And in the most recent half, about 99 million renminbis, which would translate to roughly $20 million Aussie at the revenue line, growing quite smartly year on year. It says to me that you've got some pretty loyal customers yourself in those banks that are maybe that are now realizing the need for those engagement tools.
Oh, absolutely. I mean, I think, you know, these sorts of customers in China, you cannot just simply walk in the front door. The days of acquiring a customer in China through what we call guangxi, a relationship, are gone. Sure, you can have relationships to open the door, but if you can't prove capability, you'll leave that door faster than you went in. These are long-term customers. They're customers that really, and sometimes often have a tail of 3 to 5 years to acquire them. But once you have them, providing you maintain that integrity in your service offering and your capability, then you'll have them for a very long period of time. The banks and insurance companies are absolutely paranoid, as they are in every jurisdiction about letting third-party service providers touch their clients. And here we are sitting literally in between the banks and their customers, providing value-added services. It's quite a unique ecosystem. It would be extraordinary to see it occur in the Australian market, because the bigger trading banks here just won't let third-party operators have access to their client data. So we have that in China. The next big leg of this is helping the banks understand how, with the use of technology, they can use that data to improve their engagement with their customers and build their customer bases. So that's a very exciting bridge that we're going over now. And, the digitization of these segments in China is obviously going to accelerate that.
Now, what I'm impressed by, the Chinese market compared to Western markets, many of our viewers will better understand, is the importance of virtual goods. As in the willingness of people to buy and sell virtual goods is a whole lot higher in the Chinese market than it is elsewhere. That's great for insurance companies like Ping An, for example. It's in a sense, it's a different world that you're operating into what we're used to here.
Absolutely, and I think the comfort that the new Chinese and the evolving Chinese consumer, number one, the comfort they have with the engagement via a mobile device, because you've got approximately 1.1 billion mobile internet users in China, targeted by 2025.
And smartphones here, not dumb phones, right?
No, smartphones. That's right. 71% of bank customers in China use a mobile bank app for all their banking services. So when you talk about virtual products, this is a very interesting one in China. Because it's non-physical, their comfort level with virtual product delivery, and as a value-added service provider, our comfort level with virtual products is very high, because we don't get stuck in supply chain and logistics issues, because any physical product delivery, that represents a problem in any country, and particularly now post-COVID, there's a real problem with the supply chain. But virtual products can happen instantaneously. When you look at segments like insurance, these are huge growth opportunities in China. The participation rate in insurance as a product is growing. The penetration rate of insurance as a product is growing. So businesses like ours, which sit between big customer bases owned by these financial organizations and technology, with the ability to deliver those virtual products, have great growth profiles. And insurance, I think, for 99 would be one of the most exciting growth segments for us, because of that very fact. It's virtual, it's accepted that that's the place to buy it. It's just that it all happens via the mobile device.
Right. Now, you've had the benefit of some great founders. This company was started in about 2011. It used to be called 99 Wuxian, so I'm presuming that the founders were based in Wuxi originally.
Well, it's a very good guess, Stuart, but Wuxian actually in Chinese means no limits.
Okay.
And the whole meaning behind it is wireless. In other words, the mobile device,
right,
is limitless.
Okay.
So, Wuxian in Chinese also, interestingly enough, means something along the lines of long life together. And so the concept of the reason we rebranded and changed the name to 99 Loyalty was that is at the very heart of our positioning. Our sole focus is to help big financial services organizations with loyalty of their customers. We changed it to loyalty because we feel like the Australian market and the Australian investors really understand this term loyalty.
Right.
Around the world now, it's broadly accepted. Loyalty programs per se in China are reasonably new business compared to, say, Australia. But the history is that, Wuxian was just the Chinese literal meaning of wireless, no limits. So 99 mobile.
Right. Revealing my ignorance of Chinese geography and language at the same time.
Yes, it was a good guess.
Now, I remember reading years ago, if you lay out a list of the world's most valuable brands, Apple's up near the top, Coca-Cola, Nike, the usual suspects, but Ping An and the big four banks in China are also up there as well as being important brands. And yet we're at a relatively early stage of the loyalty programs, as you were saying, for some of these really powerful brands. What opportunities can you see your company being able to leverage as this whole sector matures?
Look, I think for businesses in China, and 99 is obviously one of those that has that existing relationship with these big company brands, be it a big bank brand or be it a big insurance company, there's obviously a very significant opportunity to work with these big brands as they utilize the tools and technology to drive that loyalty into their customer base. So, there's no bank or insurance company that doesn't understand the value of your existing customer is higher than acquiring a new one. But the real exciting part about this in China is that providing you've got that historical relationship with these banks, once you get them, and insurance companies, once you get them to the point where they trust you, it's the utilization of the data and the depth of data they have and the data mining that can be done to create targeted and pinpoint marketing programs for their customers, which means that the success rate on what you'll see from these big banks and insurance companies for loyalty programs as we go forward is only going to increase, because if anything, they've been slow to adopt using the data, but they've got massive amounts of big data. They've got more data on the Chinese consumer market than any online player, including Alibaba. Because you've got to remember, as a consumer, your online activity holistically might be 25, 30%, but you've still got a big chunk. You don't buy a house online.
Right.
You generally don't buy a car online. But these behaviors, the banks see all of them, and a lot of them are also for the big spending that happens in China. You've still got a lot of credit cards out there. And so all that data the bank's been accumulating, and now they're starting to work out that if there's smart technology service providers, we can use this data to enhance the engagement of the customer and increase their activation with them as a product or service provider.
Yes. Now, you and I were talking before I pressed the record button here. It's fair to say, if 99 Loyalty was traded in Shanghai, on the Shanghai exchange, if that were possible, it would probably be capitalized a little bit higher than the 60 or 70 million you're currently capitalized on ASX. And some of that 60 or 70 million is cash, right? You're carrying no debt. So this is a very de-risked story.
Well, yeah, look, we are carrying debt, Stuart, but our net tangible assets, as we sit here today, equate for approximately 80% of our paid up capital. So our paid up capital is 65 million Aussie. We have around about 45 to 48 million Australian dollars in net tangible assets, which is our receivables, predominantly banks and insurance companies, less our domestic financing facilities.
Right.
So yeah.
Unusually for a technology company, we can buy this thing for only a modest premium to NTA.
Well, that's right. I mean, that drives to the whole question of valuation. I mean, obviously, it's extraordinary to see a tech company, particularly after 18 years of operation, with the scale of clients we have, with an existing run rate of 50 million Australian dollars per annum, with this amount of NTA sitting on its balance sheet. But that is the business model. B2B drives lower cost of engagement. So your risk return is quite attractive with a B2B tech company. And 99 is a great example of this, but we would probably say that at 6 cents bid on the market, we appear to be very undervalued. We're either trading at a nominal premium to our NTA, but if we look at, you mentioned Shanghai, if we look at mobile technology companies around the world, you're seeing multiples of anywhere from 8 times revenue up to 20 and 30 and silly numbers time revenue. We're currently looking at 99 and it's trading at about 1.3 times revenue here. If it was listed in Shanghai, you'd have to assume that it would align itself with global comps. And so if we extrapolate that to multiple, even 8 times revenue, we should be a $300 to $400 million market cap as a very base case.
Right. Now, let me ask the dumbest of dumb questions here. Now, obviously, we all know about some of the challenges that Australia and China have had in terms of their diplomatic relations. So leave that to one side. Some investors are probably saying, well, does 99 Loyalty have issues with repatriating capital earned in China back to investors here? Are there any issues that one has to negotiate if you're your company in that regard?
Yeah, it's actually a very good question, Stuart, and I think it's a very valid question. First and foremost, as a tech company, our focus is on growth.
Right.
So I don't want to say that we don't have a current objective to pay a dividend short term. However, in the long term, let's assume that as a tech company, and if the rationale of we're not burning a lot of capital and we can continue to grow the revenue and create profits, we wanted to pay a dividend. Number one, there is very good now precedence for a Chinese tech company listed on the Australian market that has actually gone through that process and paid a dividend. And I think you may be familiar with that one. But more importantly, there is a very defined process that allows you to do this. And it's not so much that it can't be done, it's just that for an Australian company, for argument's sake, once the company's declared the dividend and it's payable, the payments are processed and it goes into the shareholder's bank account. Right. Whereas in China, from that point there, you've got a time lag of probably 3 to 4 months of requisite process and regulatory approval. So the only difference is you've got about 5 more boxes you've got to tick, but 100% you can get through the process. And the good thing is we now have very good precedence for that exact thing. Identical structure for 99. We're said an Australian listed Chinese tech company with our structure declare and pay a dividend to domestic holders.
Right, but to your point, there is just so much growth opportunity in the beta market China now that you're well placed. Let's just plow as much of the capital you've earned back into the business and grow it quite strongly.
Absolutely. I mean, we as a tech company, I suppose we would love to see a lot stronger headline growth. If our target internally is 20 to 25% headline growth, that's a nice growth profile. But it's also, I think, the senior management of the business and the board have taken a view that China is a market where you can manage risk, you can't manage return. And so our view has been, let's ensure we have a strong growth profile and we guarantee the business stays alive and grows in China, because things the problem in Australia, sometimes we take a too short a term view. We always took a 10-year view with going into a business in China, and coming up 2 years away from 10 years in this business, at 10 years, the business should start and accelerate towards a point where it becomes too big to fail. But we're a number of years away from that at the moment. But China, to a large extent, is about managing risk. The growth in the China consumer market and the flow of the river will take care of your growth, provided that you can manage the risk of doing business in China.
Yeah. Now, for investors who don't know you very well, you were sharing with me that you've gone back and forth to China possibly 200 times in the course of your career. What attracted you to the Chinese market as a way of hitching your stars to their growth trajectory?
Well, I suppose in the first instance, Stuart, going back to 2006, the rhetoric and the discussion and all the political discussions, we thought, China has become such an important trading partner to Australia, with almost 20% of our two-way trade. I don't think the average investor and the average Australian realises how important the economic trade with China is to our standard of living living in Australia, the lucky country. And so when we first went to China, we thought, let's try and identify opportunities where we give Australian investors participation in some of these exciting growth segments that we could see happening over the next 10 years. So yes, look, I've been to China from 2006 to today. I've been to China over 200 times. It started as an exploratory mission, but very soon we were fortunate to meet people and discuss growth segments that really opened our eyes. And from our point of view, it was as much about wanting to understand China and invest there directly ourselves as bring some of these opportunities via some listings to Australia. You know, the Chinese listed technology companies that we've introduced to the Australian market, first and foremost, we think that you've got to adhere to best practice corporate governance and protocol. And providing you do that and you have good close relationships with your executive and your board in China, then you de-risk. And so number one, you make sure that you comply with all the regulations, best practice corporate governance, and the growth and excitement of China long-term will build these businesses.
Well, Ross Benson, here's for a big payoff for 99 Loyalty. Thank you for your perseverance on behalf of the shareholders to build this company.
Thank you very much, Stuart. Delighted to talk to you.